Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, May 15th, 2007, and the market's closed. The Nasdaq 100 lost 44 cents, or just about 1%, and that market saw the worst of the selling today. The S&P only lost 13 cents, or 0.09%. So we've been looking at this market as holding first the 10-day moving average, and then I thought that the 20-day moving average might act as support, but we've broken below that. And you can see that today's sell-off came on increased volume once again. So that's the second time in the last 4 sessions that we've seen heavier volume sell-offs in the Nasdaq. Now, I don't think it's the beginning of the end here necessarily, because we do still have the rising 10, 20, and 50-day moving average. So I think it is likely, though, that we could see a retest of this level down near 45.70 again. And looks like this market could just be digesting the recent gains through time in here. Again, no damage to the uptrend, but we are getting evidence of a little bit more selling pressure and more urgency on the part of the sellers as the volume is picking up in here. So it does mean we want to be cautious in here. And I would say the proper course is cautiously optimistic. When we look at the 10-minute time frame, I pointed out yesterday that the 5-day moving average was declining, and that gave us reason to be cautious. So that caution should have held today, and you shouldn't have fallen for the early strength. If you wanted to get long, I think that the opportunity was maybe in here, but it quickly failed, you can see, and that sell-off continued lower. Now, I've been thinking that maybe 46.15, 46.20 would be an area of support, but we did close below that level, so it gives us further reason to just be a little bit more cautious in here and think that perhaps we're going to see a retest of these lows. Of course, Friday's options expiration day, so that a lot of times does factor into trading for the week, and it's anyone's guess how it might factor in. So just continue to be cautious in this environment. The market spent a lot of energy getting to where it is over the last 2 months, and some further consolidation wouldn't come as a surprise and would actually be a good thing for this market, as it can, if it can hold on above prior resistance levels and then build for another push higher after that consolidation is over. The S&P 500, the spiders, we saw increased volume in here as well, and you can see that volume came as it did 4 days ago with some selling. So again, more reason to just be cautious. There's zero damage done to this uptrend on the daily time frame, but these are good signs that warning signs basically, that not necessarily a top is in, but just that the easy gains probably aren't going to be there for a little while, and the market needs to digest a little bit. Aggressive traders could consider selling short as it breaks down. Here we see that the 5-day moving average kind of flattened out and maybe heading lower a little bit again here. Now, just based on this amount of sell-off here late in the day, I think that before I would consider such a short-term sell trade on the short side, that is that I would look for some strength first. In other words, look for a rally and then sell the weakness. But it's just getting choppy in here. This market is kind of range bound, I guess you could say, that range being about 149.25 up to 151.5. And we'll see what happens if we're going to get a test of this level. If it does, I wouldn't be surprised to see it act as support, but if it was to break down further, then perhaps we're going to see a little bit further selling. So it just seems as though the market might be at a little bit of a crossroads here, at least in the short term, and that just means that it's time to be cautious. Doesn't mean go sell short aggressively. The semiconductors were actually the leaders to the downside with a 1.3% loss. They lost 50 cents, and you can see here that it looks like we lost this trend line, this little uptrend line. Now, breaking an uptrend line doesn't mean that we're going to get a reversal, but a lot of times it means that we're going to see further consolidation. And it looks as though the 37.50 level is the most important level of support, as it was resistance a couple times here. We'd seen support just last week, and now we are back at that level once again. So the daily time frame, though, still in a great uptrend here. Just a little bit of reason for concern, because we are in here as well, seeing the increased volume coming on the downside. But we do have a rising 10-day moving average, rising 20, and rising 50-day moving average. The 10 is above the 20 is above the 50, and this weekly time frame still looks great in here, although extended. So perhaps we're going to see a little bit of time consolidation, and breaking below 37.50 for more than maybe a half hour or so. A little probe below there wouldn't be a bad thing, but if we stayed below there for a half hour or so, then maybe we get a move down below 37. So there are some downside risks, but it's definitely not a real reason to think that it's time for a short sale. Now, yesterday I had said that because we'd seen the 10-day moving average cross below the 20-day moving average in the IWM, that was more indicative of a market that needs to consolidate a little bit in here. And that's what we're seeing right now. We'd been watching for the last month and a half or so this 81 level, and we had seen a couple probes down below it as support, and it bounced from there. Now we're getting down to the lower end of this range in here, which is 83.25 to 81 to 83.25 in the IWM. So it looks as though, again, just a little bit further consolidation, maybe even down to 80.5, wouldn't really damage the trend here. But the IWM seems to be losing its leadership position as the semiconductors are breaking down the Nasdaq and the Russell, not breaking down, but in the short term breaking down. Again, I want to make it clear that with the exception of the IWM, where we're seeing the 10 and 20-day moving average crisscross, the semiconductors, the Qs, and the spiders are all remaining in very good, strong uptrends on the daily time frame. It just looks like we're due for this little bit further consolidation in here.